Welcome back again for our third and final demo day. I'm Kelly Fryer, Executive Director of Fintech Sandbox. If you tuned in yesterday and Tuesday, then I hope you've enjoyed our 9th Fintech Sandbox demo day, and we're so happy you came back again to join us for our last batch of presenting startups. This year, Fintech Sandbox has featured 18 powerhouse startups over 3 days, more than we've ever featured in our demo day event. You've seen the wide array of fintech products from across all corners of the globe, all focused on building the future and solving real-world financial challenges. Now, if you haven't joined us over the past few days, Fintech Sandbox is a nonprofit that provides a leg up for entrepreneurs around the world by providing them with free access to critical data and resources in order to build their early stage products through our data access residency. We're proud to say that since 2014, nearly 300 startups have been a part of our program. We've built a truly global collaborative fintech community. Now, Demo Day is an opportunity for Fintech Sandbox to bring this community together and feature a few of the incredible startups that have come through our program recently, and to showcase the products they've built and grown with access to data from Fintech Sandbox's amazing 4D data partners who provide data and infrastructure for free to some of the top fintechs in the ecosystem, as you'll see here today. Last year, Fintech Sandbox's data access residency saved an estimated $5 million in data costs for our startup founders through our mission of making entrepreneurship more accessible and removing barriers from launching a fintech product. Before we dive in, though, I need to spend a moment just recognizing our small but very mighty team behind the scenes who made this event happen this week. Fintech Sandbox is a group of hardworking, passionate, talented folks that get things done. If you've not met our team before, I hope you get the pleasure of meeting them soon because they're an amazing, amazing group. So I just want to say a huge thank you to our Fintech Sandbox team. I also want to say a big thank you to our sponsors. As a nonprofit, we wouldn't be able to host events like this or support as many entrepreneurs as we do without you. If you'd like to partner with Fintech Sandbox and help us build the future, please reach out to our team. We'd love to talk to you. Again, if you haven't had a chance to join us this week, just a few quick housekeeping and logistics on our event platform. First, feel free to say hi and introduce yourself in the chat on the right-hand side of your screen there. And you can see profiles of each of the startups in the startup tab up at the top. Today, we'll have another 6 demos in stores for you. So each company will present for 6 minutes, including showcasing how their product actually works. While they're presenting, someone from each company will be on hand to answer typed Q&A. So feel free to add questions via the Q&A tab on your right-hand panel. Just be sure to include which company the question's for so we direct it to the right team. There will also be a poll tab that we'll use to keep track of interest in the company. So if you'd like to follow up or connect with any company afterwards, the poll will pop up on the right-hand side of the screen. And just be sure to submit the poll for each company you're interested in. And then in between the demos, you'll also get to hear insights from fintech and financial services leaders on trends going on within the industry. So today you'll hear from senior leaders from F Prime Capital, EY, and Goodwin. Now, on to the demos. Day 3 of Demo Day is all about small businesses and financial infrastructure. These are too often overlooked, but most essential backbones to our communities and economies. In the recent years, and especially over the last few weeks, there's been more and more conversation about the importance of small business and the infrastructure needs of businesses generally. There's limited financing and banking options for them. Small businesses tend to struggle to find the support they need, and the lack of infrastructure and digital solutions needed to keep businesses going and operating on a day-to-day basis. So given all of that, I'm especially excited to get started with our demos today.
My name is Oliver Belin. I'm one of the co-founders of Calculum, and I'm super excited to present you today the company, as well as give you a glance of our platform called ADA. So let's start. Who is Calculum? So Calculum is a Miami-based startup. We started about 2 years ago, and we are focusing on one thing, which we do very well, is we analyze payment terms. And we not only analyze, but we help companies optimize these terms and also negotiate better terms with their suppliers. Now, when you think about payment terms, maybe it's unfamiliar, but why payment terms? And it's simple. It's every company which is dealing with customers on one side and suppliers on the other side. When they negotiate, they always discuss mainly 4 key points. The first one is, how much do I buy, the volume, the pricing, the quality of the goods and services, and the last point is, when do I have to pay you? Now, obviously, payment terms and the length on how long you can keep your cash on your balance sheet has a huge impact on cash flow, on working capital. When you ask your peers, when you ask your colleagues how they determine what should be the right payment terms, interesting enough, you only receive 3 answers. The first one is, I just use what I'm used to. I just apply 40 days because this is what I used the last 5 years. Or I'm using what my counterparty am asking me. Or more sophisticated companies, which we are dealing with, like Roche Pharmaceuticals or others, larger organizations, they use Excel. But as we all know, Excel is 100% manual, it's slow and inefficient, and it only gives you your view. It doesn't tell you what other market participants are applying in terms of payment terms. This is why we introduced the first platform really focusing on payment terms, which is called ADA, which is fully automated, which gives you access to millions of data points and only requires 6 data points from you as a client. So we only need to know who is the buying entity, the name of the supplier, the location of the supplier, the volume you're purchasing, the currency, and the actual payment terms. And the platform does the rest, and very, very fast. So we can analyze thousands of suppliers in just a few days. And how we make money is very simple. It's a subscription-based pricing. So you pay and you have access for 1 year to all the data and to your team, to your users, which have access to all the insights which you can use in optimizing and negotiating better payment terms. Why are companies using our platform? It's very simple. Mostly it's because they want to increase liquidity, unlock working capital, and increase free cash flow, which is particularly important in the current market environment with increasing interest rates. The other one is cost reduction. So having a way to provide early payment terms and getting cash discounts for that. The third one, which a lot of analysts are looking right now, it's improving working capital metrics, looking at ways to increase the efficiencies on how you manage working capital. And then obviously ESG and sustainability metrics. And the last one, just being simply more competitive by having data about what is going on with your competitors and your market. So let me use this opportunity to show you our ADA platform. So the first point is really having a look on how you are comparing to your peers, to market averages in terms of the key working capital metrics. Then once we receive your data, and I said, we analyze it very, very fast, we clean it, we match it, and then we provide you an overview about how much are your weighted average payment terms, how much leverage you have with each suppliers, and multiple ways how we slice and dice the data to see pockets of opportunities. The platform also automatically analyzes the credit rating of each single supplier and gives you a way to simulate what is the potential cash flow by adjusting your payment terms to your peers, to your competitors. In this case, free cash flow of $16.3 million for this demo account. And then we not only show you the opportunity, but also how to create a plan with the different rollout phases when negotiating terms. And we not only provide this information on a portfolio basis, but for each single supplier. So we show you here who is the parent organization, the sister company of your suppliers, the funding cost of the suppliers, financial metrics, ESG scoring. And the last point, very important, we give you all the argumentation for your procurement team to negotiate these terms with a full script in different languages, which tells you step by step what you have to say. So that was a quick overview. Thank you very much. And I'm looking forward to meet you in New York very soon. Thank you. Bye-bye.
Good afternoon, everyone, and thanks for coming out. My name is Marc, and after selling my previous startup in the working capital optimization space, I jumped right back into it with the company I want to share with you today called Fishtail. Fishtail empowers logistics companies to finance the movement and procurement of goods for small and medium businesses around the world, either by arranging extended payment terms through the financing of freight or financing the goods themselves. But before I dive deeper into what it is that we're doing, I just wanted to set the scene for you around the complexity of international trade and kind of the intersection between that and logistics. And so as a problem space, let's say I'm Procter & Gamble and Walmart sends me an order of 10,000 cases of shampoo. I got to then spend the money on the raw materials. I got to buy my chemicals. I got to buy my paper, my packaging. I got to ship my stuff. And then after Walmart finally gets the thing, I can finally invoice them. And so that's, easily 143 days before I get my money. And on top of all of that, I have spent all of this cash on, working capital to make the order happen. Broadly speaking, people will not fund the purchase order. They will not fund the beginning half of the transaction. They will wait until the invoice is raised and get that factored. And this really sucks for most businesses simply because they don't necessarily have the working capital to do this for multiple orders at the same time, or even orders in general. And a reason why a lot of the financial institutions don't want to touch the early part is that it's really hard. That's because documentation isn't digitized. It's not super automated. I mean, for context, you may have 20 documents that are associated with one transaction. So you got to have a team of people that are literally, entering in pieces of data to figure out what's going on from end to end. And on top of this, underwriting this stuff is an absolute nightmare. And that's kind of what makes Fishtail special. We digitize, automate, and facilitate the funding of trade so that we can fund much earlier than traditional financial institutions are able to. We can fund in a lot of markets that, banks traditionally don't love. And to do this, we basically insert ourselves around our borrowers to act a little bit like their AR and AP automation tools. So we replace a lot of their financial infrastructure to pay their suppliers. We underwrite every supplier basically on an automated basis. And then we underwrite the buyers of each transaction to make sure that we're going to get paid. We've built a lot of tech so that we can bring down the cost of doing these transactions to basically be zero. Because traditionally speaking, if I'm a bank, it costs the same amount of money to fund a $30 million transaction as a $30,000 transaction. So no bank likes to do this stuff. Add, the fact that you're also working in a bunch of countries, it just makes it super complicated. And so some of the tech that we've developed to solve these problems range from generative AI, because that's the buzzword of the day, trained on trade-specific data to document digitization, plus financial infrastructure that we've developed. And I'll tell you a little bit more about some of the crazy data work that we're doing in a second. But kind of our insertion point in the process is an embedding directly into the software that the logistics companies are using so that we can generate orders, invoices, create legal documentation that is actually backable by our financiers. And because we are embedding ourselves directly into the software, we're pulling out supporting documentation, stitching it together, and creating a little package that our finance operators can see so that they don't have to do any additional work. They can just hit approve, or we can completely automate it if we're very confident in that data. Some of the other stuff that we had to build along the way is this document digitization tool, which, as I mentioned earlier, you may have 20 documents associated with one transaction. It's, purchase orders from the suppliers, invoices, bills of lading, packing slips, all sorts of other stuff. And you literally have teams of people entering in that stuff. We'll pull all of that data out of the documentation and shove it to wherever it needs to be, saving a lot of time along the process. But the thing that makes Fishtail unique is the fact that we track everything in the world. We track every boat in the water, every plane in the sky. And frankly, if a shipment has ever crossed a border, we know about it, which helps us build out our underwriting process in a relatively novel fashion so that we can effectively estimate the financial health of any business in the world. This is relatively novel, and in fact, we're even looking at other, usages of this data. And of course, because we're gluttons for punishment, we also predict the CO2 emissions for everything that moves, and we can use that as a mechanism to change the change the interest rate of the financing of the stuff that we're doing. So you may have two ships that are literally moving the same, port to port. One will emit an order of magnitude more CO2 than the next. That seems like a super low-hanging fruit for us to enable trade finance to turn into an ESG investable asset class. it's a super fun thing. I'm a dirty hippie vegan, all sorts of good stuff to save the planet, plus make some money along the way. Little snapshot of what that looks like from a user perspective. The market that we tend to touch is the broader trade finance space. It's about a $9 to $10 trillion a year space. We go to market right now by working with logistics companies to enable them to offer financial services to their customers. That is an interesting insertion point because one forwarder may have lots of buyers and lots of suppliers, so it makes our underwriting a little bit easier. It's an emerging space in terms of competition. There's a lot of data providers. There's some new fintechs that are popping up in the space. Our specialty is kind of bridging those two worlds, so we're relatively unique. And if you want to learn more about the stuff that we're doing at Fishtail and talk about collaboration, please come find me after the thing. Thanks.
Hi, everybody. I'm Sarah Lamont, an investor at F Prime Capital, an early stage venture capital firm based here in Boston and San Francisco and offices globally in Europe and Asia. We've been backing entrepreneurs for about 50 years across healthcare and technology and enterprise and fintech companies. So I focus on our fintech investments and also a data advocate for Fintech Sandbox, where F Prime has been partnering with for the better part of a decade since its inception. So today I'm going to go over a couple highlights from our second annual State of FinTech report that we started up last year after the launch of our FinTech Index. Obviously, you can see from the slide that the year of 2022 looked a lot different for FinTech companies than 2021, which was a record year by a lot of counts, almost 80 public listings, record revenue multiples, record VC funding, and the bubble kind of popped in 2022. So we've been tracking public fintech company performance for a little over a year now, and now have 55 companies we're tracking, so we can kind of get the sentiment of fintech company performance. So I'm going to dive a little bit around what happened this past year and why we're still excited about fintech. So one piece that corrected a lot this year were the fintech revenue multiples. So towards the end of 2020 and early 2021, some of the best performing, highest growing companies were seeing revenue multiples near 30x. And this year they've completely plummeted to even the best companies garnering like not even a 5x revenue multiple. And interestingly, for the first time since we've been tracking these multiples, the fastest growing fintech companies, or those growing over 40%, are actually valued lower than the medium growing counterpart of 20 to 40% growth. So this kind of reflects a shift in mindset of growth at all costs to one of more sustainable growth and profitability, and something we expect to see a lot more of in 2023 and beyond, more companies becoming profitable and more sustainable growth. So that's on the disruptor side, but another interesting way of looking at the performance of public fintech disruptors is comparing it to the public incumbents. And so what we see is not only have fintech companies gone through this massive reappraisal in 2022, but they actually have been re-rated such that they look a lot more like the fintech incumbents that they actually set out to disrupt. And so they've kind of lost that big delta between the disruptive and incumbent performance. And so in sectors like lending and insurtech, they're actually being valued lower than the incumbents. And in other categories like payments and SaaS, the delta shrunk. They're still outperforming, but that delta has shrunk quite a bit. If I turn towards reasons we're still excited, I'd look towards history. In the mid 2010s, there was a cohort of companies that were revalued, and rightfully so. Maybe in some cases, there was a cohort like Lending Club and Funding Circle who looked a lot more like a traditional financial services company and were re-rated accordingly. But there was another cohort of companies like Block, formerly Square, and Shopify that were re-rated, but investors eventually realized that they were proving this actual genuinely disruptive category and actually grew into the private market valuations that they had seen a couple years before. And ending on a more positive note around why we're still excited about fintech. Fintech disruptors have only captured a really small portion of the financial services industry revenue, no more than 7% in any of the sectors that we track, mostly in payments. But there's still a lot of ways to go. So we're really excited about companies that are building here. Existing fintech companies have a lot to capture, and new fintech companies being born that still have a lot to build and to prove. So we're really excited. If you want to read more about the FinTech Index or the FinTech Report, you can go to fintechindex.fprimecapital.com to read and learn more.
Hi, I'm Kevan Silva, and I'm a co-founder of Impactica Labs. Today, it's my pleasure to be here with you to talk about the solutions we're building to improve access to the social safety net. For over 100 million people in the United States, access to benefits are critical to their economic security, day-to-day well-being, and serve as a foundation for their economic mobility. From healthcare and nutrition to access to essential services, access to these publicly funded programs are facilitated by both for-profit essential service providers and nonprofit organizations that we serve at Impactica. Unfortunately, today, access to these programs is encumbered by long applications, antiquated systems, and confusing procedures, resulting in an unnecessary burden that has been acknowledged by the federal government as a time tax on some of the most vulnerable communities in our nation. These processes are so difficult, upwards of 40% of people who are eligible for benefits cite understanding the process and providing financial documentation in a timely manner as the main reasons they drop out of programs. These obstacles have massive ramifications to the tune of over $80 billion being left on the table by those who need it most. Beyond the effect on individual families, this impacts local economies and essential service providers missing out on billions of dollars in revenue each year. We set out to solve this challenge at Impactica. So we asked ourselves, if most private companies can access complete financial information on an individual in a matter of minutes to make decisions, why does it take that same individual hours to days to compile the same information about themselves when applying for benefits? So we set out to create what we call Impactica Financial ID. We provide a tool for service providers to give to their customers to access their own financial data that they will need to apply for benefits. In effect, Financial ID does for benefits what the Common App has done for college applications, but in the pursuit of making access to essential goods and services much easier. We do this by connecting over 400 payroll systems, 12,000 banks, and making direct connections to government data systems. Thanks to Fintech Sandbox, we've been able to test with relevant data sets with partners such as Equifax, Plaid, and Argonne. So let's walk through what setting up a financial ID profile is like when applying for SNAP. We can white label these sites and provide an eligibility calculator that after a few questions, individuals are able to know how to apply for the benefits they're seeking. We start with building their financial ID by connecting their bank accounts, enabling them to find their bank, sign in, consent to all the information being provided, and then doing the same with their employers. Now they have all the relevant documents for applications here in one place, ready and accessible for them and the organizations they are applying for benefits with. We provide what we call a financial ID statement, which aggregates all the relevant data for applications in an easy-to-use UI. And once the file is complete, they have everything they need to apply. We offer organizations a simple tool that is mobile-ready for their customers, and a platform and API for them to connect into to manage this process. Our pricing is meant to accommodate organizations of any size and type, from your largest national healthcare provider to your local community-based nonprofit organization. May 11th, 2023 is an important date, as it's the official end of the COVID-19 public health emergency. 20 million people are at risk of losing access to these essential programs over the course of a year due to inability of the state to process applications in a timely manner, despite having hired over 100,000 new people and dealing with backlogs that include incomplete, ineligible, and fraudulent applications, jamming up the process. And in turn, service providers like healthcare providers, utilities, and telecoms all face massive billion-dollar shortfalls due to these loss of benefits. So where are we today? We're looking to complete development of our platform by the end of the quarter, with the plan for a beta release with a national nonprofit partner to run our pilot. By Q3, we plan to launch Financial ID 1.0 for the broader public and plan to spend Q4 focused on healthcare access implementations well into 2024. So from this group, we're asking for help building partnerships and finding trial implementations with organizations in healthcare, such as managed care organizations, universities, hoping to ensure that students have access to vital benefits, and nonprofits working on benefits enrollment assistance, as well as systems integrators and consultants that are helping both federal and state governments with these systems. Thank you for your time today.
So far, we've seen trade finance, supply chain analytics, and nonprofit infrastructure. These are perfect examples of how fintech solutions can fuel innovations in industries and functions beyond just financial services. We really see fintech powering change across industries, and we're so excited to work with even more entrepreneurs to do just that. As a quick reminder, if you haven't already, be sure to check out the poll tab if you'd like to follow up with any specific teams and learn more. We open a poll during each pitch. If you'd like to connect with them afterwards, then it's a great opportunity to do so. And you're also welcome to ask questions in the Q&A tab. Just note which company you're asking. We've been getting some great questions coming in so far. Okie dokie, up next, our wonderful partners at EY have shared this video featuring EY Global Nexus leader, David Connolly, and his perspective on what's next in embedded finance, always a hot topic. After that, we'll also round out our Demo Day events with our final 3 pitches, all focused on financial solutions built to solve unique SMB challenges. So enjoy the video and our final pitches.
This is real-time business. Embedded finance is on the verge of rapid evolution and adoption as non-financial services firms look to enter the market. For more on what this means, let's go to David Connolly, EY's Global Nexus leader. David, to get us started, can you give us a definition of embedded finance?
Yeah, embedded finance by definition really is getting that moment of value in that point transaction so that if I need to make a purchase and I can get my lending taken care of right then and there, if I want to take care of a payment or I buy a product and I want to get insurance for it, right then and there that transaction occurs.
So what's driving the interest for non-traditional industries to enter financial services?
The trend we're seeing by 2027 to 2030, we think somewhere around 30% of all transactions in that insurance, lending, and other areas are going to take place on an embedded basis. This is creating a huge opportunity for other industries. We see automotive, we see healthcare, we see pharmaceutical, all now looking to launch their own embedded finance products. We also see a reactive trend where the incumbents, the banks, the insurance companies, well, they too now are starting to up their game and bring a better product and service to market. In the end, the customer will win.
What is an example of some of the new innovations you're seeing in this space?
One of the largest global manufacturers of vehicles and commercial trucks has made the decision to launch their own commercial fleet insurance product. This is going to be groundbreaking and rock the industry because they've got more data coming off the vehicle about the environment surrounding the vehicle and the customer itself to provide true transparency into the pricing, as well as create a better experience. But don't think that this manufacturer of vehicles is done with just commercial fleet. They're going to offer a full suite of products for the small business owner, the large business owner. Everyone has a home, a car, perhaps a pet, life insurance, health insurance. What started off as a commercial vehicle provider could become one of the largest producers of insurance protection in the world. We have a platform called Nexus, which is what we're enabling all of these products and services to bring to market at speed.
Given the amount of disruption, what's your advice to financial services executives? What should they be doing now?
In the end, the customer wants one place to go for their transactions, and there's no financial service organization today that can bring everything you need to one place. So partnering up is going to be essential. Bring together complementary products and services to give that customer one place to go. The data associated with this will be very valuable, so that should be a side benefit to those that choose to be the orchestrator of the ecosystem. But at the very least, every financial service organization should plan on being a partner in someone else's. Again, the data will be very valuable associated with that, and the purpose that we have for Nexus is as that platform to bring these products and services as well as to curate the ecosystem at speed.
Thanks, David. Clearly, there's a lot of change coming in the insurance industry. This is real-time business.
Hello everyone, my name is Moustapha and I'm the CEO of Fluid Finance. And today I'm going to tell you why isolation keeps millions of people in poverty today. Throughout the global South, you'll realize that most people are not tech entrepreneurs like myself. They're not office workers neither. Most people are actually smallholder farmers. In a country like Ghana, 1 out of 2 adults works in agriculture, and the vast majority of them are smallholder farmers. Throughout Africa, smallholder farmers contribute to 25% of the continent's GDP and are truly economic engines for Africa. Nevertheless, smallholder farmers remain kept in poverty. And the factors why they remain in poverty are actually lack of access to financial services, lack of access to inputs and services that are going to help them increase their crop yield, or even fair markets where they're able to sell their crops at fair prices and create wealth over the long run. On the picture that you see on the right-hand side of the screen, you're seeing one of the reasons why smallholder farmers in Ghana are kept in poverty. This is actually a mobile banker. She works for a bank and she's going from community to community to open bank accounts, originate loans, and track transactions entirely on paper in 2022. And this lack of digital tools and operational efficiency keeps millions of smallholder farmers excluded from the financial system. At Fluid, we aim to change that. We aim to create wealth for smallholder farmers. How do we do it? First of all, we take the system that banks have been using, the paper-based system that they've been using, and do away with it by giving them a mobile application to do everything that they used to do in those farming communities, such as opening savings accounts, originating loans, and tracking transactions between farmers and banks. But more importantly, throughout this entire process of originating loans and monitoring them, we build data on farmers. And that data allows us to then being able to go to the agricultural value chain and being able to create bargaining power for farmers and allow them to truly build wealth tomorrow. I'm going to show you what that looks like. On the screen, you see the mobile application of Fluid, in which a mobile banker, like the lady that you saw in the previous slides, goes to a farmer and then originates a loan for the farmer. She's going to collect the location of the farm. She's going to collect the type of crops that the farmer is farming, but then also being able to collect even things as granular as the amount of fertilizer he wishes to have, the amount of mechanization he requires for his farm. And all that data is going to then inform the bank as for the needs of the farmer and allow them to give them the right amount of capital to increase the crop yield and really create income for the farmer. More importantly than that, we then take this data on thousands of farmers and aggregate it. And this is where the magic happens. By aggregating data on thousands of farmers, we're then able to create bargaining power for them. We're able to go to fertilizer producer, mechanization providers, and being able to get services for farmers at better prices just because we're able to syndicate farmers together and get them bulk pricing, which also helps them create wealth. And we do the same as well for crop sales, in which we're able to go to commodity off-takers and being able to present to them data and being able to get better deals for farmers tomorrow. Ultimately, since our launch in 2022, we were fortunate to onboard 7 banks on our platform and reach 4,600 farmers on our platform and manage more than $1.2 million in loans given to farmers. We also received the backing of the MasterCard Foundation, the IDEA program at Northeastern University, and that momentum, that support gives us the ambition to reach 350,000 farmers by 2025 and being able to create wealth creation opportunities for them. Over the next couple of years, we want to start by solidifying what we call the wealth virtuous cycle, in which the farmer is connected to banks, the farmer is connected to input providers as well as a market, and this circle allows the farmer to truly build wealth on a year-to-year basis. But later on, we want to go and aggregate the data that we have on hundreds of thousands of farmers, being able to go to impact investors, institutional lenders, and being able to get access to cheaper funding for farmers to be able to let them even build more wealth and have more money by the end of the season. Ultimately, we want to tackle difficult problems to solve, such as the issue of climate change in the global south, which is actually extremely impactful as we speak, and being able to provide smallholder farmers by 2025 access to weather index insurance and being able to receive income from carbon credits and truly fulfill our mission of building wealth for smallholder farmers. If you're looking to connect with us, we're looking for partners that can help us get access to inputs for farmers and a better market for farmers, but even more than that. And if you're interested in connecting with us, please visit fluidfinance.co or connect with us via LinkedIn. Thank you.
Hi, I'm Josh Burlingham, and I'm a financial technology and regulatory attorney at Goodwin Procter. Because I'm a lawyer, I have to begin by telling you that everything I'm about to say is for informational purposes only and is not legal advice. One of the most frequent questions we get from our startup clients is about money transmission. What is a money transmitter? Am I a money transmitter? How money transmission is defined, it varies at the state and federal level, and even among the states. But generally, it means receiving funds for transmission from one person or place and transmitting those funds to another person or place. So for example, if you operate an invoice or bill payment service provider or an online marketplace, and you receive funds from a customer or end user, and you send those funds to someone else, like a company or seller that your customer or end user is trying to pay, you may be viewed as a money transmitter by certain regulatory authorities. That is, unless an exception applies, or unless you've structured your flow of funds to minimize your money transmission risk. Other examples of possible money transmitters include providers of digital wallets capable of holding end-user funds, and cryptocurrency companies that issue, exchange, or custody tokens. So if your company is engaging in any of these businesses, or is otherwise receiving funds and then transmitting them, your company should consider whether it's a money transmitter subject to money transmitter laws. At the federal level, money transmitters have to register with the U.S. Financial Crimes Enforcement Network, or FinCEN. And at the state level, they may need licenses in as many as 49 states, plus Washington, D.C., and some of the U.S. territories. While registering with FinCEN is a relatively simple process, obtaining state licenses can take several months to a year and be very expensive. Because licensing can be so costly, burdensome, and take so much time, younger companies often seek alternatives that will enable them to enter the market as quickly as possible. They may begin by hiring an attorney to explore whether they're eligible for any exemptions. There are exemptions that may not be available in every state, but may still allow the company to operate in at least a few test markets. Alternatively, a company may seek to enter into a partnership with a bank or a licensed payment provider who can move the money using its own charter or licenses so that the startup doesn't need to be licensed. Goodwin knows you have some exciting and innovative visions in the works. And as you grow your operations and need to navigate regulatory risk, we look forward to working with you to develop compliance strategies that are right for you. Thank you for tuning in and enjoy Fintech Sandbox Demo Days.
Hello, everyone. My name is Jake Cutler, and I'm the founder and CEO of Ampli-fi. We're a fintech in the small business lending space, and we like to partner with the small brokers and small businesses that may otherwise get left behind by big banks and lenders by digitizing the most painful aspects of the finance process. Did you know that there was $2 trillion worth of equipment purchased in the United States in 2021, and $1.16 trillion worth of that equipment was purchased using finance? You can't have an equipment finance agreement without one buyer, one seller, and one lender willing to put in some capital to that transaction. In this case, the equipment buyers, the Bobs of the world, tend to be the backbone of our society. They build our houses, they drive our transportation, they may own a restaurant, and they can't complete these small businesses without the equipment and working capital they need to run. The equipment sellers, the Toms of the world, they want to help the Bobs, but in some cases, there's nothing they can do if they don't come up with the capital they need. And in other cases, the Toms are just left waiting days and weeks without knowing if this is really a viable customer. Unfortunately, the big banks and lenders don't always care about the smaller Toms and Bobs of the world. And that's where brokers come into play. Brokers help connect Tom and Bob and the smaller transactions to the capital they need. Ampli-fi is an embedded banking as a service platform that helps improve the process for all sides. This is an example of what the process is like today. Looking from Terrence's perspective, there's thousands of brokers out there. They spend a ton of money on marketing. They're on the phones all day. And when they connect with a small business that needs lending, they're still providing printable PDF applications. They may partner with a Tom to provide this to Bob, or they may provide it directly, but it immediately causes friction. It's more work for Bob. It leads to a ton of emails. And Terrence then has to read through credit reports, and small brokers deal with a high volume of bank statements. Hours are wasted. It takes a ton of their time, and it leads to a manual syndication. If it's over a certain threshold, Terrence is going to shotgun this out to several different lenders to see if he can get the best opportunity in, meaning he's also wasting time for lenders that are underwriting transactions that may not get approved or may never proceed. We know that there's a better way. We provide landing pages and embedded products to brokers and equipment sellers. We work with them on their marketing materials to help connect their buyers and borrowers to our custom online application landing pages, where we've automated the process of pulling and assessing credit. We give buyers and borrowers immediate feedback, as well as opportunities to connect their bank accounts or securely submit documents in a way where we can get more data and do further impactful digital underwriting. We provide real-time analytics to our partners, and we're looking to get to a fully automated space of digital syndication. This is an example of what the process looks like for our partner, Terrence. This is Terrence's webpage, where we provided him with an embedded product that leads to our custom online application. It looks great. Buyers know that they're in the right space when they get to this landing page. When they complete it, it automates how it pulls and assesses their credit, giving them immediate feedback and ways to potentially connect their bank account, meaning they could be fully completed with the process in just a matter of minutes. If they prefer, we also have a space to securely submit documents, and we're building in a product for AI document classification where we'll scrape more data and do further impactful digital underwriting. In any case, we drive Bob to a completed submission. This is what the experience looks like from our seller partner perspective. This is one of our real world partners, SIOPs. They have more than 20 salespeople, and all the salespeople and the buyers can easily find our finance solutions on their webpage. While this looks like a SIOPs landing page, this is actually something we own and we provide to small businesses that may not have a technical or marketing team behind them to help build something. They only need to hyperlink this so it can be easily accessed. We provide them with marketing materials and embedded tools, and we have a quote tool so all the people on the sales team can easily send quotes to their customer. Whether it's through the landing page, marketing materials, or the finance quotes, we drive people to that online application where Bob gets that remarkable experience that drives him through to a fully completed submission in shorter time than is typically available. We were also asked by sellers and brokers to provide them with a dashboard so they can get more information. This can provide them with a forecast of what's been closed for the month and help them identify what transactions are moving forward without having to call someone like me for an update. We've worked on this process of how we improve the process of the submission delivery, and our next step is to improve our lender filter and securely delivering these document packages to the lenders. We have 6 seller partners. That means we're working with 30 different equipment seller partners that use our products to introduce us to their customers where we're actively closing business. We have 2 brokers that are trialing our product, and we're excited. We've already built the process that automates pulling and assessing credit. We're moving to a space where we're improving our lender filter and our document submission delivery, and we have a vision to move to a full machine learning construct where we can assess the buyer sentiment and where we can take those really complicated lender and bank credit underwriting needs and digitize it so it can be navigated in just moments. We're amplifying, and we amplify the process for brokers and sellers looking to give a seamless experience to buyers, help amplify to get capital to the small businesses that need it to run. Thank you. Feel free to contact me for more information.
Hi, everyone. My name is Josiah Crombie, and I'm one of the co-founders of Cake Capital. Cake Capital is a Toronto-based technology company, and we're transforming the way businesses access capital and enabling founders to make a life, not just a living. Small businesses make up more than 50% of global GDP. Over 33 million businesses power America. Whether it's the fitness center down the street or the SaaS company in the garage two houses down, it's incredibly difficult for founders to raise money for their companies. My background is I bootstrapped 2 different companies before this, ended up exiting both companies, and I saw the same problem over and over again. Founders sacrifice so much to grow their companies to power their dreams, either by taking on too much dilutive funding or what we call the marriage ender, putting up your house as collateral. In 2022, 80% of venture dollars were deployed in 4 states in America: California, New York, Massachusetts, and Texas. Less than 4% of venture dollars went to underrepresented founders. This year, we'll deploy over $25 million to enable the best founders to create their life's work. For us, it's about building a world where entrepreneurs can achieve their most ambitious goals, and it's not limited by geography, age, gender, race, or anything else. Cake can approve payouts in 48 hours by integrating with commonly used banking, accounting, and payroll apps. We use data science and AI to effectively do what VCs and banks are doing. We adjudicate on a unit economics basis, but in a much more scalable way. Using AI, we ingest banking data in real time and auto-generate a cash-based P&L to streamline the underwriting process. Companies with recurring or predictable revenue can place their future sales on our trading platform and get upfront access to capital. The assets that are traded on our platform are the underlying revenue streams of these companies. So let's say I'm a company named Pied Piper, and I have $100 of predictable revenue. It's a family business that I took over, and I promised my dad I wouldn't give up too much ownership. But I'm a trailblazer, and I always knew we could grow exponentially by expanding to the US. I've heard a competitor also wants to expand, so I want to move fast. Cake algorithmically underwrites my business and gives me a rating between BB and AAA. Institutional investors can then bid on these risk-rated buckets, so let's say 90 cents on the dollar for a single A-rated company. I get $90 of upfront non-dilutive capital, and the investor gets the full $100 over a 12-month term. It's that easy. Up until now, SMBs have not had access to major institutional funding, and lending into this asset class has been extremely fragmented. Our vision is to level the playing field for SMBs and give them the same opportunities as larger corporates. By pooling and securitizing SMB loans at scale, we are unlocking a new asset class for institutional investors the same way mortgage-backed securities did for the real estate market. Cake's full financial ecosystem was designed to help entrepreneurs move fast and have their money keep up. We offer growth capital, corporate cards, bill pay, wire transfers, and expense management all in one place. This is your Cake homepage. Cake's powerful platform allows for an intuitive and easy sign up in just minutes. In the dashboard, you can access Cake financing, payments, cards, and account settings all in one place. Let's move on to Grow. Getting set up and approved for a trade limit is simple, and it only takes a few minutes. Grow lets you manage and trade instantly using the slider. Easily select how much you want to pay, trade, and then get funded. Cake's state-of-the-art platform uses AI to immediately approve qualified companies and enables institutional investors to deploy capital against your company's revenue streams. Next up is Send. Easily manage your accounts payable and receivables all in one place. Schedule no-fee payments and set reminders so you can even integrate Cake with accounting platforms such as QuickBooks, Xero, Wave, NetSuite. Say goodbye to spreadsheets, no more manual CSV uploads, and invoice reconciliation. Cake makes it fast to pay your bills, digitize your invoices, just upload and let Cake do the rest. Get access to our corporate credit card with higher spending limits and advanced expense management controls. Issue physical and virtual cards to pay business expenses with preset limits and controls to manage all of your corporate spend. Cake empowers your employees to purchase what they need to get their work done without you having to worry about overspending. Redeem Cake points for gift cards and upfront access to over $500,000 in member perks available across the global Cake Capital ecosystem. Improve cash flow, save money, and scale quicker with Cake's all-in-one financial ecosystem. Now back to the presentation. Cake Capital was founded 16 months ago, and to date, we've raised over $675,000 in equity and up to $15 million in credit. Our primary focus will be corporate partnerships to give us access to millions of businesses, channels such as Microsoft, LinkedIn, Intuit, and QuickBooks, as well as with government entities like the SBA, the BDC, and the EDC. Our digital marketing will include targeted LinkedIn outreach, as well as a robust Instagram and Google ad campaign. Getting accepted into Fintech Sandbox has been such a tremendous opportunity that is truly unmatched and has provided us with the crucial data we need to underwrite against our models. It's been such a competitive advantage. We're thrilled to be part of the pitch. We're looking for strategic partnerships with financial institutions, government entities, individuals familiar with the space. We're also interested in partnering with talent for a rapidly growing team. By working together, Cake Capital can help small businesses gain access to the financing that they need to successfully scale with speed. Cake is here to accelerate ambitious entrepreneurs who want to change the world, allowing them to grow, hire, scale, and succeed like never before. Visit our website today and sign up at cakecapital.com. Wasn't that a piece of cake?
Congratulations again to our 6 amazing companies today. Building innovative products like these for small businesses or to improve financial infrastructure and back-end systems is so essential. This is what powers financial systems and truly lifts up economies. Also, thank you to Sarah Lamont from F-Prime Capital, David Connolly from EY, and Josh Burlingham from Goodwin for sharing your takes on the current fintech landscape too. Over the last 3 days, we've showcased 18 startups from Fintech Sandbox's data access residency. Just a small percentage of the nearly 300 startups we've worked with so far. We hope you got to see the breadth of fintech, variety of data usage, and global reach of Fintech Sandbox over these last 3 days. Again, if you're a fintech entrepreneur like these folks, looking for data access or need help getting off the ground, submit an application to Fintech Sandbox's data access residency. We accept startups on a rolling basis and are always admitting new companies to our program. And thank you once again to our Fintech Sandbox sponsors for generously supporting our entrepreneurs, our organization, and this event. And thank you to our data partners for fueling fintech products and working with us to push innovation forward. If you're interested in working with Fintech Sandbox to build the future as either a data partner or a sponsor, please reach out to our team. We'd love to talk to you. Thank you all again for joining us over these past 3 days, and I hope you have a great week.